Yeah, we were responsible for producing 2% of the global Bitcoin mining hardware. Once we had to lease a whole Boeing to get those machines as fast as possible. We want to invest 20 million. And they were like, sorry guys, we don't need 20 million. Okay, I got my 2% management fee per year running. Like, why should I think outside the box? Why? We have been investing in this company called Bitfury Group, which no one wanted to invest in Bitcoin mining. We leverage the fact from a portfolio company needs. We're going to invest, take this risk, buy those machines. Unique economics at the time were amazing. The payback was, I don't know, 3-4 months. Ukraine invasion war and the pricing of power in South Norway skyrocketed. It has become way less profitable. Built multiple data center business for Microsoft and the large hyperscaler. Our major customer is Crusoe Cloud, which raised 150 million financing from HIG Infrastructure.
Today's guest is Fiorenzo Manganiello. He's the co-founder of the LIAN Group, which have deployed over 500 million euros into many different startups. Fiorenzo and Nassim, his co-founder, are not just investors, they're actually venture builders, turning concepts into reality. And they've built really successful companies across AI, blockchain, digital infrastructure, and healthcare. It's a fascinating conversation, so let's get stuck in. But just before we do, let me introduce this week's sponsor of the OpenVC Podcast, Intercom.com. Intercom help founders by making your customer service 24/7. Through their use of innovative AI, you can answer 50% of your customer needs instantly. Intercom is offering 1 year free if you use the code OpenVC, all in caps, at the checkout using the link in the description below. And let's get back to the episode. Can you tell us a little bit more about how you chose this model of venture builder over a more typical venture capital fund?
Yeah, sure. I would say if you look at our history, we started as a traditional VC investment firm. We were investing even $20-50 million in large tech companies in the US. And eventually, we didn't have any control. We barely have any reporting. We used to have 1% of a company, no decision, no power. And on the other side, we had investors that obviously wanted to have access to information and pushed us in order to kind of improve those companies. But, we couldn't do anything, right? And then I say to Nassim, my co-founder, I say, look, Ness, I want to be able to justify to our investor, action and decision. We can propose to just, invest in companies that we are building. I know obviously it's 10x more difficult, as I told you, but eventually we are the owner and the decision maker of the choice we do. And, I would say we really transitioned then from a traditional VC model into a kind of, as you say, venture studio, company builder, holding company model right after 2020, 2021. And that's the best decision we have done because obviously we have created way more value for our investor and for ourselves as a shareholder of LIAN than we would have made being a traditional VC company.
Amazing. Okay, so what kind of things do you have in your background that convinced LPs that you guys weren't just good investors, but you're good builders as well?
Yeah, if you remember during the 2019, 2020, all of these American large companies, they didn't need any funding, So what was very difficult for us at this time was we were going there and say we want to invest 20 million. And they were like, sorry guys, we don't need 20 million, we need customers and we need actually people which are using our products. So what we done internally back in the days before transition is that we built a team of what we call company relationship manager, clients relationship manager, where actually those role of those people was just to call companies in Europe and say, look guys, there is this fintech in the US, do you want to take a call? And then, we were introducing those companies, those clients to those companies in order to get the allocation to invest.
Oh, wow. So real value add rather than, so to win prices in the deals, you'd actually add customers, do the hard groundwork on behalf of the companies that you're trying to invest into. Amazing.
Absolutely. And the whole idea was, okay, when we go to see this successful fintech, we're not only bringing the 20 million, we'll tell them, look, we're going to bring you 5 banks in Europe, And so, because of the process, we actually learn many of the business secrets in a certain way from the successful entrepreneur, from listening to those customer calls, etc., etc. And the real switch was Cova. So we have been investing in this company called Bitfury Group, which was one of the top producer of Bitcoin mining hardware in the and we realized that okay, why don't we kind of try to do what Bitfury is doing in Europe ourselves. We always start with one pilot. So everything started because we didn't ask investor, okay, let's throw us $50 million. And we say, look, we have one use case. We have known this company. This is, how we plan to do similar things in Europe. Do you want to write a check for a first company? And so it started, if you want, as any business, as a first use case and first company. And then, it was great developments and we could scale up on other sectors.
So just for the audience that don't know, Cova is a wild breakout success in the Bitcoin mining space. So just take me back to the MVP.
Yeah.
How do you do an MVP of a Bitcoin miner? Doesn't it require lots of hardware, access to energy? These things are really expensive.
Yeah, to give you the context, we were after the halving in 2020. So no one wanted to invest in Bitcoin mining, it's a very similar situation as we're living, basically now in the Bitcoin mining space. The machine price was completely cheap. Chinese manufacturers were calling you, do you want to take machines? And it was probably 10, 20x cheaper than, 1 year later in 2021. So, we say, okay, why don't we take risk? And, what we realized at the time is that, there was a huge concentration in China. And, we saw Europe and especially Nordics and Norway as a great place to be. And what we have done is actually, we just went to discuss with one of our portfolio company, Bitfury, and we told them, look guys, you have energy, as you say, you have built a site in Norway, as you say, which costs you a lot of money. However, you guys, you don't want to invest buying some hardware now. Let's make a deal. We will just buy some hardware and we'll plug it to you and, we'll kind of pay you a rent. So, you will monetize your assets and at the same time we can plug this machine. But you're right, because eventually it would have been impossible to start because those are infrastructure projects. So actually we leverage the fact from a portfolio company which needed actually to do something with an assets in Europe. And we say, look, no one wants to invest. We're going to invest, take this risk, buy those machines, and you will be the operator of our company. And then
Wow.
that's how the spin-off started.
Fantastic. Okay, so why was the Nordics a good place? Why had Bitfury built a data center, the shell of
Yeah,
a data center in the
yeah.
Nordics?
Like the Nordics represent really the El Dorado of data center, right? Because it's a very good climate, like it's fresh, so don't need the excessive cooling cost. It has huge abundant renewable energy, like 99% of Norwegian energy or Nordics energy is hydro, so it's green and it's no CO2 emission. Energy is cheap. We are discussing energy pricings which most likely are 80% cheaper than Europe, 90% cheaper than Europe. And fourth, it's that an amazing regulation. You are not doing that, in a country where they might have war or there might be a conflict. So it kind of ticked all the box of the place to be. And I guess Bitfury identified that trend because I've built data center there, few years, probably in 2016, 2017. And we saw that having as Bitcoin is a very decentralized technology, we say, look, decentralization is not there because 50% plus is in China. Let's try to bring some decentralization in Europe. And on the other side, China was full of coal and no renewable energy. So let's bring the second positive aspect, which is renewable energy, into the game. That's how we started.
Okay, so you're helping a portfolio company, they've got a site ready to go. Was there a big strategic decision to decide to focus on Bitcoin? Were there alternatives also being looked at? Was it quite a hard thing to sell to the company?
So, at the time, it was a very high risk bet.
Okay.
And eventually, it was a great bet. But Fury, as portfolio company, had nothing to lose. They wanted to divest Europe. They didn't have any capital required to invest, buying new miners. This is exactly what they say. We came to that initially with a solution which we thought would be only on a specific site, and then once we understood and we learned the business from them, we say, okay, now let's scale up. So it's to answer to your initial question is obviously we learn the skills also from the portfolio companies by speaking with the team of the portfolio companies, by understanding what they're doing, and not just obviously by reading and reviewing investment memo,
Okay.
really going on the ground and doing stuff.
So take me back. Was it 2020 you said when
Yeah,
Bitcoin halved?
yeah.
So at the time in 2020 when you were doing the unit economics, was it profitable to mine Bitcoin at that time? Because you said that the hardware cost had plummeted. your access to energy is 80-90% cheaper than what residents in Europe are able to
Yeah.
get. Did the unit economics work then, or did you have to place a bit of a bet on where the future price of Bitcoin was going to go?
No, I would say the unique economics at the time were amazing if you would have the money to buy those machines. You
Okay,
know,
wow.
however, I would say it got a double lucky effect because as soon as we started, six months after, there was a Chinese ban on Bitcoin mining. So you
Mhm.
got half percent, 50% of the network was shut down, which immediately means almost like you got double your capacity from the day tomorrow. Almost like you bought twice the machine in one day. So obviously there were some positive as the manufacturing was based pricing on a 1 year payback. Actually, those machines usually last 3 to 4 years. But what happened is that eventually Bitcoin price skyrocketed. There was this famous Chinese ban. So probably the payback was, I don't know, 3 4 months, in a certain way for the initial purchase.
Wow, that's
So
fantastic.
yeah.
But you got to take the risk, right? You got to take the risk to get the reward. It could have gone the other way. That's phenomenal. And actually, I completely forgotten about this ban. Is that still in place today?
Yeah, look, theoretically it's still in place. I mean, we still see from some data points that there are few companies operating in China, but officially it's still then. And I would say it was still funny because now it's looked like very simple, but I remember having call with the major Chinese manufacturer and going to do those order or machines, and you're obviously just sending money and you don't know where those machines are going to arrive. You don't know about importation tax, like I remember once we had to lease a whole Boeing to get those machines as fast as possible because waiting 30 days for a boat shipment will actually make lost us a lot of more money than just paying a full plane that would bring those machines 2 days later.
Wait,
So
you chartered an entire
yeah,
Boeing airplane to get this
yeah.
hardware from China faster. That's
Yeah,
fantastic.
yeah,
Wow.
yeah, yeah. Those are kind of the investment decision because eventually, if the Boeing cost, I don't know, 5 10 times more, but the times you're waiting, if you take 30 days, money you're losing. So yeah, it's kind of funny decision.
Phenomenal. Okay. So, in terms of the world today, give me a bit of a map. How much of Bitcoin mining happens in Europe? How much of it happens elsewhere?
Yeah, basically today, there was a huge trend of US building heavily in the space. So today
Okay.
we are at probably 55 60% in the US. And the Bitcoin mining is specialized across region like Texas. Then the rest is basically spread mainly in Canada.
Yeah.
If you look at that line, there is obviously Russia, Kazakhstan, and you might be surprised, but Africa is growing, like Ethiopia and all of that, and Middle East is also growing, like Dubai, Abu Dhabi, and that region. Today, Europe it's a very small segment. I think we're probably below 5% of the world total hash rate, and this is because especially after the Russia-Ukraine war, price increase in European energy, even across Sweden, Finland, Bitcoin mining becomes harder and harder to implement. I would say US is still a dominant player.
Okay, that's really interesting. Thank you. Is it still, so Koa is currently a private company?
Yeah.
Do you get much of a valuation premium for being a green Bitcoin miner as opposed to someone using non-renewable energy sources? Does the market reward you for that? Is there much uplift?
Yeah, there is obviously an uplift, I say, and eventually, there was a full idea that obviously, you can recycle some of the heat of your data centers. You can really have a full circular economy playbook for the whole operation. However, if you want my personal opinion today, people care less about the CO2 and the sustainability because like what you are looking and everyone is looking is access to energy as soon as possible and as cheap as possible. So that element now is priced less inside the company, but still, I think we see it as a very valuable point.
Fantastic. Okay, so you've taken this chance, you've got this data center running mining Bitcoin in the Nordics, and you actually own Koa
Yeah.
as part of one of your portfolio companies at LIAN. So do you also get to say when to sell? Is there much of a discussion about this? Are you mining and holding for as long as possible? How do
Yeah,
you find that equation of short-term cash flow versus maybe being a bit too speculative?
we tried all the formula, and
Okay.
unfortunately, the answer is simple as that. We believe the best risk adjusted formula is to sell every day. because like it's very hard to price Bitcoin. You might say, okay, I sell it weekly, and maybe that week is high and next week later. So we ran few back testing stuff, and we realized that basically the best strategy is to average everyday price and sell every day, because eventually this allows to not suffer too much on your stock in case the BTC has a huge drop overnight of 20%. At the same time, it's obviously has less of a potential upside, but you are basically averaging your gains. So obviously you can play the option market very well. We have done it a few times in a very, very good way. So the way it works is that I'm producing 50 BTC over the next, 2 weeks, and I really like this price of $1,000 because I believe that there might be a macroeconomic event, there might be a ban or something, and then you can decide to lock that production over the next 2 weeks, just buying options. And we're done a few times, and I would say we spotted, for example, the FTX events, like there was a 30-40% crash overnight, and we were able to save and again optimize that production because of those hedging strategy. So today the good things and good answer is that the market is becoming so institutional that it has advanced as financial market. You can pre-sell your production, you can hedge your production, you can do whatever you want in order to hedge or calculate any strategy.
That's fascinating. That's really quite advanced manufacturing processes that
Yeah,
you've got going there. Okay.
yeah.
In terms of unit economics, with the growth in the price of Bitcoin, has that outstripped the increased difficulty level of mining? Has it become more profitable or less profitable over the last few years?
Well, unfortunately, the bad indication it has become way less profitable. If you look at the price of Bitcoin today as 1K, the complexity have done it 5, 6 times 6 times 7 over the last 2-3 years. So in reality, it's way, 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 way less profitable. Just to give you an idea, today we are really at the bottom in terms of profitability of the history of the Bitcoin, nevertheless this BTC. And this is simply because people have invested billions of dollars into building data centers, into buying machines and hardware, and that's obviously as creating a compression of margin for all the players, which as how economics should be. But again, I think what's always important, it's very simple, is that as long as you got very efficient operation and very cheap energy, as energy is 80% of the cost of a mining operator, you're good to go. We're also actually have transitioned towards more of a hosting business model. So today we don't take too much of a risk on BTC. We're just hosting clients that they pay us almost like a rent, fixed dollar rents. So whether the Bitcoin is 100, 250, we're kind of covered on all the
Okay.
side, yeah. In a couple of moments, we were controlling 2% of the global production. Global production before halving was 900 BTC per day. So probably 18 BTC per day. You are thinking about an annualized probably 150 million, 200 million revenue with a very high operating margin.
Fantastic. Okay. So did you also pivot a little bit into training AI and LLM models when OpenAI was looking at training their next model? They have to get a lot of compute power because they process so much data to do that. Is that still an opportunity that you see?
Yeah, actually, no. If you look at one of the second largest infrastructure businesses that actually we have created and incubated, you got Polar DC, which today is a significant player in the AI data center training hyperscaler business model. And this is a very funny story as well. We obviously saw how profitable was this Bitcoin mining, and we basically decided to secure multiple lands with multiple power in view of actually building data center. We actually invested in a lot of lands and sites in south of Norway, very close to Oslo area, and very good for latency, close to Europe.
So how does that work? The government lease land, you buy the option to lease the land, there's a hydro plant going in. As someone
Yeah,
that has no idea about this injury, what are you acquiring at that
yeah,
stage, at the earliest stage?
that's a good question. Like the process is very simple. You need to find the land which has connectivity or access to power in a certain way, or at least a plan of
Okay.
actually building the powers via substation close by, etc., etc. And that obviously there is a full, elements of due diligence alongside multiple stages. But you can either buy that land and hold that land, but obviously, It's not very interesting because, there's huge amount of land in Norway. So, even if it's cheap, like this is not where the value is. The value is inside the access to power and the power agreements, right? So if you got a power agreement, you can just lease that land over 20 years, whatever it is. But we started to buy those lands, and what we've done is started to build the full infrastructure. So after you secure the land, you obviously need to buy the transformer. You need to level that land. You need to start to basic and the foundation of a data center. And right after, like we finished, and I remember it was one of our CTO which was there ready for the launch of our, like Bitcoin mining data center. Basically what happened is that there was a Ukraine invasion war, and the price of power in South Norway skyrocketed. And we're like, okay, maybe this is something that's going to last 1 week, it's fine, we're going to plug those machines in a certain time. And unfortunately for us, the bad idea was that actually, unfortunately, since then, the power prices in south of Norway have never been down. And the reason is that the way Norway works is that the south is connected to Europe, so can sell and distribute power. However, the north cannot. So the prices in northern Norway stayed and are still today very favorable, under 3 cents, 2 cents kilowatt hour. But the prices in the south of Norway became like price in Paris or Europe.
Yeah,
And
so the power provider is going to sell their energy for the highest price they can possibly find,
yes,
unless you've locked them into a power agreement
you're
where
right.
they're obligated to give you a certain amount.
Yeah, in fact, way unfortunate event. We had done a power agreement in the north, and we look at 10-year history, and the average is so low. Why we should? Because you need to put the deposits when you want to do a power agreement, a large deposit. It's like, why should we do a power agreement? Maybe we can play the optionality. We have the price locked there, and the price doesn't lock there. And eventually, we didn't decide to lock the power. And so, like I remember, I was discussing with my co-founder. I say, what do we do? Because we invested all of this money, 1.5 year process, and what do we do?
And all the hardware, is all the hardware specialized at this point for Bitcoin mining?
Yeah, it was.
Those machines are ready to get plugged in,
Yeah,
and they're very bad at doing other processes. They're not
yeah,
okay.
yeah. And so, we're like, obviously a little bit stressed, and I would say this was in early 2022, and we're like, okay, what possibly we can do? And we started to look at the AI space and the whole, idea of training models and all of that way before ChatGPT came through. Is there any way we can transform this into a AI training data center? But we have no idea about AI training and how to build the AI data center because, this is a completely different business, It's not like just you take a container and you put a machine inside, you have multiples, you need about latency, you have multiple parameters which are completely different. And the way we work is that we just went on the market to find the best CEO as possible for a data center business. So we found an amazing team which had built multiple data center business for Microsoft and the large hyperscaler. And we told them, look guys, we have an opportunity for you. We want to build this new business which is called Polar, and we're going to repeat the same stuff we've done on the mining side for the AI side. We claim to them, we have the power, we have the lands, we have the solution ready to use. What we can give you is that we can give you these assets. Let's try to pitch it to clients and transform it into AI. The team had done an amazing job repurposing these assets to become today one of the largest facility which we employ, where actually our major customer is Crusoe Cloud, which is one of the leading AI cloud provider, and it was very successful. Eventually we also raised 150 million financing from HIG Infrastructure, which is obviously one of the leading US infrastructure funds, and all of that to grow this business on multiple other sites to become again the leading player of AI training infrastructure in the Nordics.
Fantastic. And also, wow, there's a lot to unpick there. Fascinating. I suppose, are all those new sites clustered in the south of Norway?
Yeah.
What attracts you to other countries?
No, we're basically working on the Nordics in general for the same reason that we discussed about Bitcoin mining, which is about energy and about CO2 efficiency and all of that. I think the idea was great because as we were in the Bitcoin mining, probably 12 to 18 months in advance before anyone else went there. This is actually, I think, the easiest lesson that we got, and which is constantly what we are doing, is that we're always thinking, okay, what's going to be the next trend, and just we sit down together, we discuss, okay, this is emerging, what we can do. And AI training was for us, we already have everything. We just had to create a company and find a team and, try to market and test.
And was it possible to repurpose the existing hardware that you had for this AI training?
No, so the hardware, actually, it was another issue. We had to kind of ship it into another location and find a facility where this hardware could have hosted. But we were able to kind of repurpose the energy infrastructure and, all of these transformers and stuff. But obviously, AI requires specialized GPU. So it's not the same thing.
Yeah, and actually that's one of the biggest risks, right, for an infrastructure play in this field, because your hardware gets outdated so fast. NVIDIA can't stop producing the next chip. Customers want the latest and greatest. So how does that factor into contracts? Do you have to make a lot of money in the next 2 years before you have to do another huge capital outlay to keep up with the latest hardware?
Yeah, actually, Harrison, this is exactly the lesson we had at Cova, because what we saw in Cova is exactly as you say. We bought machines that 2 years later they were 50% less efficient, and 4 years later they're just, as you say, you just throw them because they're useless. So what we've done with Polar is that our approach is that we are not buying the GPU, so we are not taking, if you want, the technology risk or the depreciation risk. What we are is that we are just AI factories that actually customer can come with their own GPU. So it's a different risk profile. We're more kind of a operator of AI factories and builder of AI factories. But then, we sign with customer over 5 to 10 years, but they are buying their GPU. And
Probably makes sense though, because if you think of that capital efficiency, for them to pay you to buy the hardware would be extremely expensive.
yeah,
And you're not an AI company.
yeah.
But these big AI companies are raising money at hundreds of millions, billions of pounds or euros even. So it makes more sense for them to take a bit of a higher raise and actually put their own capital on the table when it comes to buying that hardware. Is that a common approach though, or is that still quite
No,
rare?
I think it's still quite early, and I think it's a very good risk-adjusted approach. So, what we realize is that what's going to happen, and what's already the case, is exactly what happened in Bitcoin mining in 2022, which actually people bought so many machines, but then they were like, okay, where do we plug them? People were calling us and say, can we plug those machines to you? And we say, look, sorry guys, we're busy. So the same is going to happen eventually for the GPU business over the next couple of years, because building a data center requires multiple years, and require finding the power, and permitting and regulation and all of that. So we're just building the space, and then we will find people to put the GPU. However, if we're thinking on the model on the opposite way, which would have been, okay, let's buy a GPU and then eventually we'll find a place, I think there would be a high risk that, we wouldn't know how to put those GPU and they would still be in a garage, not making any money and depreciating fast.
Yeah, I mean, it sounds like a very smart pivot that you've made, which is less capital
Yeah,
intensive because actually these GPUs are extremely expensive, and I'm sure the latest Bitcoin miners are extremely expensive. But actually, you're very specialized in finding the right locations and building the foundations of what a data center needs, regardless of what the purpose is. So you've got that flexibility of what the next trend might be, which
absolutely.
leads me on to the next question, right? So you spotted these two things early. You spotted Bitcoin mining early, got really good timing with the Chinese market shutting down. You've seen this AI trading market early and there's some big contracts. What are you thinking now? What's in 18 months? What's going to be the next big thing that you're looking towards?
Look, the next big things with respect to, if you want, techno infrastructure that we're very exciting, and we're currently building internally. It's potentially an AI inferencing network. As you're familiar, training is a huge element, probably 90%, where inferencing is still very early stage. The pivot is going to happen, most likely in the next 24 months. I think, this idea of edge data center or micro data center distributed across cities, it's very relevant, So what we're looking at the moment very carefully is how, we can build a network of small data center that, can be maybe installed inside your house or, your office space, that actually you can use internally for your own GPU or AI compute, but also you can resell it on a marketplace and monetize. There are a couple of crazy ideas that we are looking at the moment. One is of potentially bridging the gap of solar panels and GPU. So kind of putting, GPU very close to a solar panel in your house, because a solar panel have a 10 years, 12 years payback, and like people don't want to buy them. But however, if you say, look, this solar panel has a GPU, and you can rent that GPU, and like you can pay back.
Instead of selling the electricity, you're
Yeah.
selling GPU compute, which
Yeah.
is maybe 10 times more expensive. Okay, wow. So that's very smart. I love that.
And then
But it would have to walk on a tiny, like it wouldn't have much compute each individual unit, right?
exactly, yeah. So yeah, you're right. Eventually, the idea is that you are building a network of multiple decentralized inferencing points. It's something that very excites us a lot. And there are things that also we are exploring internally in a very early stage on potentially building a marketplace that combine all of these inference points and these inferencing compute.
So you've got lots of data centers in Norway. You've got Bitcoin mining going on. You've got AI training going on. But I read somewhere that you're building data centers underground, particularly in the Middle East. Why would you be building data centers underground?
Well, I mean, I'm sure you're seeing what's happening today in the Middle East. So I guess, that give you the answer. We built out another company, which is called Anagen, and it's building facility which are, as you said, underground. And the idea is really to make sure that those facilities survives in case of any, war or major event or bombs and all of that. It's a very complicated region from, the geopolitical and the macroeconomy. So, the clients there requires, and there is a demands for those kind of data center.
Critical infrastructure, hospitals, military, maybe
Yeah,
like drones,
exactly.
airspace control things have to be buried deep underground so that they can't be blown up easily. So how
Exactly.
deep are we talking? Like less than a kilometer? Are we talking more than a kilometer?
No, I think I think should be less. I don't
Okay,
remember now exactly the details, but yeah, it should be less.
fascinating. So there's lots of opportunities in this space, and the market is booming.
Yeah, huge.
Okay, fantastic. But these aren't the only things that you do, right? Because you've got 7 or 8 active portfolio companies now at LIAN. So with the remaining time that we have, let's go on to cover some of those. So from data centers to dental clinics and cheese, what inspired you to get involved in the dental space?
Yeah, like this is something that happens when you have two co-founders that have different views and they travel. So, I mean, we started that because my co-founder traveled to the US, and he is born in Switzerland, and Switzerland is still very famous for dentistry. However, it's a very old-fashioned markets. There are plenty of these small one individual shops running, and there is no tech, there is no centralized accounting, there is no digital booking. And so he came back and he's like, look, Fio, I saw this company in the US, in New York. I went there, I did a very quick, digital experience, and it was amazing, very, next gen. And he's like, let's build something the same in Switzerland. And my reaction was very nervous. I would say, I say, what do you mean? Like, as you say, that's something completely different. And in a certain way, I kind of rejected the idea. But then, we went through and, we went to a market research, and you came in the office with few dentists for interview. And I said, okay, you look like very motivated. Let's do it. And so, yeah, in fact, Cheese was one of the first company we built in what we call, next gen healthcare, or, healthcare redefined, or, like what I prefer to call it as regenerative medicine platform that we're building. Today, we have 5 companies inside this healthcare aspect, and Cheese was the first.
And what does cheese do? What's the product?
Yeah, the cheese is a simple product. It's basically the idea of offering a dental service with the latest tech, with an experience which from A to Z is seamless in terms of digital, in terms of customer service, in terms of the whole thing, right? So it's just
Superior customer
yeah.
service, lower admin time for the operators, just making it run sophisticated in a smooth manner.
Yeah, and I think the major idea is that we are not focusing on the patients, we're focusing on the practitioners. So our role at Cheese is that we are working to improve dentist efficiency. So we meet those, again, dental practice, and we say to the dentist, look, you are enjoying your work, however, you're spending 40% of your time checking invoices and doing the bookings and the HR. So what we propose you is that we're buying your clinics so that actually you already have the patient book and we already have the operation running. rather than starting things from scratch. So we'll tell him, we're buying your clinics, you are going to stay there, you are going to focus only on what you like, which is, again, patients. And we are going to take care of all the bad, boring stuff that you don't like to do.
So you
So
actually have to buy the clinic outright.
yeah. So we're consolidating clinics. We got 11 today, and the idea is that once you buy this network of clinics, you basically can make a lot of synergy. Also, my personal vision of the dentist space is that the new generation of dentists, they don't want to operate as the previous generation, which was, okay, I'm working in this location every day and this is that. Like we got 35 years old dentists that ask us and say, look, I want to be 2 days in this city, and then I want to be 2 days in the other city and 1 day in the other cities. So we also have this flexible model for our dentists.
You're also enabling, obviously, the ones you buy from you free up their cash, but the new ones that you're bringing in, suddenly the cost to serve the clients is much reduced because they don't have to buy their own clinic.
And think about it, the market is simple. Why we have a market is because percent of the time, those dentists before retirement, they are giving their practice for free. Maybe they have their junior guy, which has been working with them over the last 10 years, says, take it. So when you go there and you offer them an exit solution, you offer them to stay, you offer them
Okay.
to improve their operation, they're very happy. And
Oh, we're
eventually,
talking very low multiple
yeah,
exits. Okay.
yeah.
Okay.
I mean, not
Fantastic.
very low, but I would say 5 to 6x, right?
Okay. Well, no, that's
Which,
a lot
yeah,
higher than what I was
yeah,
thinking. Okay. And that's
yeah,
much better than giving it away.
yeah, right?
Fantastic. Okay. And so you've done a similar thing for hair and skin,
Yeah.
but instead of testing the idea out lightly, did I read this correctly that you bought a company out of administration that already had 18,000 customers, multiple locations?
Yeah, actually, I got a huge passion for hair treatments and all of
Okay.
that. I've been fearing and scaring of losing my hairs since 20 years. And what happened is that this company came to us for growth investments. It was an amazing company, amazing technology, amazing, really exactly what we were looking at in a company. And then unfortunately, they got some, in a certain way, accounting or, like audit misalignment with their auditor, and very fast this company, we don't know exactly what was the reason, kind of well declared bankrupt. And then I put up very closely and very fast a team together of 3 to 4 people, and I say, look, let's try to see if we can get those assets, because as you say, those are the market leader in Switzerland for hair implants and hair treatments. And this is a huge trend. When I see that we have 18 years old clients that are doing their first hair implant, or when I see a 30 years old clients that have done already 3, I see, I mean, that's huge, right? And eventually, yeah, we decided to cherry pick the best locations and the best doctors inside those clinics. And like 1 month later, we bought everything. And
Within a month, you've
yeah,
bid and succeeded. Wow, things move fast in Switzerland.
yeah, we bought within 1 month, and we set it up, the new operation, the new team. The company now is called Anagen. So actually, we didn't buy the company. We just bought the assets, some of the strategic doctors, the locations, and like the IP, right? We didn't buy that company. However, it's speed up the operation, because if we wanted ourselves to build all of those clinics and recruit all of those doctors, it would be a 2 years process.
Yeah. So give us and the audience a bit of an idea. What kind of discount were you able to get when you bought things in administration versus the valuation they came to you for the growth investment? There must have been a big difference.
Yeah, like I would say most likely 90%, but I think, obviously there was a competitive bid. There were multiple groups, actually, even there was international group of hair clinics that wanted to have access to these markets, which made bid, which were way, way above our bid eventually. But the funny things and the good thing is that we didn't came with the number. We came with a full plan on
Yeah.
how we were going to operate those clinics, on the employees, and eventually the court decided that we were coming not only maybe with the best financial offer, I would say, but with an offer that would reflect, according to them, a better future for the group.
Fantastic. Okay, so the administrator, you kind of know, you knew how to speak the language to the administrator, which was retaining jobs, keeping the operation
Yeah.
going, and you were able to provide the best plan that was in their view, probably best for the economy. So even
Yeah.
though it wasn't the best value for the shareholders, it was best for the economy for it to
Yeah.
pass over into your hands. Fantastic. Okay, so you've got like you've got so much going on, and actually there's still more going on because you make you make private investments into startups still. Zoom, Spotify, Rookout, Indigo. You're getting into rocket ships, so you've got an eye everywhere. How early were you getting into these hyper growth startups?
Yeah, I'll tell you, our model is simple, is that in order to create value, you have multiple ways, right? But what we discuss is this idea of being early and actually building a company. And then once you grow the company, you can raise capital. But obviously, as you are a founder, you can retain a larger share of the equity,
Yeah.
whether actually you're just an investor at a stage. However, as you say, sometimes it's a matter of time. And sometimes, you cannot build everything. So today, for example, we are also surrounded by opportunities, investment opportunities that range from early stage, pre-seed, or also Series A, where, we see amazing smart people that actually believe will deliver what actually they're saying. And so instead of doing ourselves and putting the team, as you say, you cannot be everywhere, we're just dropping tickets and investing in those companies. And I would say, if you want my opinion, this is the easiest thing in a certain way. I don't want to say that investing money is an easy job, but it's way easier to delegate money to an entrepreneur and say, look, it looks to me that you know what you're doing. Here you got the money, and then you have a chat once per year. It's way simpler that actually you are going to build all of that yourself. But for us, it's a strategy as well. We believe that we cannot build everything, and we believe that we cannot be everywhere. So we allocate a significant amount of capital that we are deploying across sectors that we like, with founders that we find exceptional. And we got 2 resources internally that just focus on that, on meeting those companies and speaking to those founders. And this is for us a way to also create value in a different way.
Fantastic. Okay. It must make it quite hard to sell to your LPs
Sorry?
because it must make it quite hard to find the right LP that's willing to support this because, other family offices or other institutions are maybe laser focused at one core thing and that's their story. But you've got this lovely flexibility to tap into many different opportunities when they strike. And actually, that has proven to be extremely lucrative for your previous shareholders. The ability to pivot from Bitcoin into AI training, the ability to repurpose the data center into AI training. Without the flexibility, there wouldn't have been as much value uplift that you were able to find.
Yeah,
So I think you've
absolutely.
definitely proven the model time and time again to be fantastic.
Yeah, and also because eventually this is the beauty of when you're not structured under a traditional 10 plus 2 fund. Nevertheless, I love obviously venture capital investing and private equity. Unfortunately, sometimes you are a little bit too lazy because you say, okay, I got my 2% management fee per year running, like why should I think outside the box, why should I try to do this, all of that? This is not my business. We don't have that because it's very, honestly, it was very hard when we starting the business, probably 25, 26 years old, to raise a significant funds and to lock people for 12 years without track record, as you say. We just say, okay, let's work on a transaction by basis. And, this is how eventually you grow up. But, our ultimate game is not to build a fund. I think our ultimate game, and, this is what I inspire myself, it's, a lot about the SoftBank model, Like the SoftBank model, like the way we see LIAN in the future is that, a little bit like also the Millennium Hedge Fund model, right? Where actually, what we ask to the people that are working with us is that we ask them to come with ideas, and we actually trust so much their talent and their vision that we'll say, okay, you know what, you got this amazing idea about center distributed, how much money do you think it needs, or here, this is the money, this is the people. Myself or my partner would be kind of a chairman, or if you want, your kind of sparrow partners, and we're kind of working together to build it. And our view is that if we're able to build 1 to 2 companies per year, in a very good sector, that's, might be worth billions of dollars of value creation. And in terms of investments, it's a lot of human capital investments, but you don't need, 300 million to become 1 billion. Maybe, with 5 or 10 million, if you are building 3 to 4 companies, maybe, again, you can get to those numbers. So capital efficiency is way better. Like, as I told you, the disadvantage of that is that, you cannot build 20 companies and all of that. People are coming to us and say, look, I have this idea. Great, we love your idea, let's build it together. This is the funding, this is the team, we are here, we got some experience in what we have done before, and we are partners, So really like a little bit like an hedge fund, we're giving money to junior portfolio manager, okay, trade me this portfolio and we'll see. We're doing the same inside this venture world.
Amazing. And so literally at pre-seed stage, you'd entertain a
Yeah,
pre-seed, pre-traction, pre-revenue idea. If they're a phenomenal founding team, you'd encourage them to get in touch with the LIAN Group.
yeah, absolutely.
Okay. So where can people find you? Where's the best place for them to reach out?
Look, many of those people actually are coming to the company as an intern, and they're working, for example, on a deal, and they're themselves being involved in a company, and then like after 4 to 5 years they come and say, look, we like you, you deliver great value on this portfolio company, now it's your turn. We really push them. We say, look, now it's your turn. We believe that you are very good. You have all the qualities and you have the willingness and the motivation. Instead of, eventually going and outside and creating your own company and maybe struggling on raising capital, do it inside LIAN, and we'll give you the money and the team. Plus, obviously, we can work together. We kind of try to create entrepreneur inside an entrepreneur company. And we really pushed people which we believe have the value to do that. Then another great model is that sometimes it's really you meet a guy in a conference, it's really like a Cupido effect, and you know the guy since 2 hours, and 3 weeks later you have a company with that person. But like that's more rare.
Okay, so I think the easiest way to show that they can add value is to get involved with the
Yeah.
portfolio company, which they can find from your website, which I'll link in the video description. I know we've run over time now, so I'd just like to say thank you so much for all this insights and for teaching me so much about many different markets. It sounds like you are always at the cutting edge of technology. I suppose anyone in the data center space or in any of your portfolio spaces with an idea of something that's going to be big in the next 18 months, they need to reach out to you. And it sounds like you'd be great partners.
Well, thank you very much, Harrison. I mean, it's been a pleasure and always happy to share the story and help people to get a better traction and understand what's the best way to get inside this industry in the best way. So thank you very much again for having me. And it's been a pleasure to have all of those great questions.
Thanks, Fiorenzo.
Thank you very much.